Are tech stocks overvalued? If you look at the Bursa Malaysia Index, the stocks that have been performing the best are the tech stocks. And right now, their PE ratio is historically highest. Many of the big ones are selling at PE 50, 60, and there are many small ones, PE 100, 80 like that. Does this mean Malaysia have a tech stock bubble? Now, if you remember, during the dot-com bubble, Amazon was already around, and Amazon was selling at a very high price as well. And subsequently, after the dot-com bubble burst, Amazon share price crashed a lot. But guess what? If you bought Amazon at the height of the dot-com bubble and you kept until now, you would have gotten a crazy good investment as well. So if you look at it, it's not really about is it expensive now? It's about the company that you're buying. Does it have good enough potential to justify its valuation? So even if on the surface they are not making money or they are expensive, high PE ratio on the surface, if this company has a super huge total addressable market and they can really change the world, then there is a real potential of this company being able to give you good return despite buying at a high price. Now, of course, it will be dangerous for you if you go all in and it's at the high price and it drop a lot, and for the next few years you look like an idiot. So we want to avoid that. What you can do is, number one, you need to have a system if you want to buy all these high growth stocks that may seem expensive on the surface. How do you do so? First, you must make sure it's a real, legit, good quality company, not just some companies spinning stories. You first need to have the competence to separate them. Number two, once you know which one is legit, you need to understand how big is the opportunity, how big is the total addressable market, and will this company be able to fulfill it? Number three, you want to protect yourself because tech stocks by nature are gonna be super volatile even though they have good future. What you want to do is you want to invest over time. So tech stocks, because of the volatility, when they drop, they can drop very fast and very huge. And if you cannot take this kind of volatility, you may not want to put so much in tech stocks. And if you do, you want to buy over time. So maybe you buy a little bit over few months. Or if you have maybe 100,000 that you want to invest in them, you go in 30,000. If it drop 20-30%, that's where you go in another 30,000. If you drop another 20-30%, that's another 30,000. That way, you know you're buying a good company, and whatever the price is, if you go up, you're happy. If you go down, you can collect more of a good company. So just follow this procedure. Find a real legit company with big total addressable market and just buy them over time. And you don't need to worry whether this tech company is overvalued or undervalued, because whatever is the case, you're gonna benefit as long as you pick the right company. So you want to discover all these techniques that I use to employ and handle and tackle all the stocks to make me consistent return about 20 to 30,000 a month. And I'll share with you all about it, how to go from zero, step by step, making your first profit and consistently generate income from stocks thereafter. Once again, my name is Ming Teck, and I hope to see you in my live webinar. Bye-bye.